I think we'll roll into it. So let's kick it off with Lamonti, because I think, I haven't had you on here for a space in a little bit, and would just love to hear kind of, what you've been buying and selling this week, trading, what you have your eyes on, maybe some of your thoughts on the massive crypto up and downs.
Hey, Lamonte, you just posted a bunch of stuff. Can you go over that maybe after you go over that?
Yeah, so there's just a bunch of things I've been looking at throughout the week. You could see there's really a divergence coming in the beginning of the year, right around the start of February, where value was starting to outpace growth, and especially with rises in the 10-year Treasury coming as inflation expectations incrementally increase. That's something that I'm continuing to watch out for, and then leads me into kind of a sector breakdown where I'm going to start to look into more financials, materials, industrials. Since the start of the year, the top three performing sectors were energy, financials, and materials, and then the bottom three coming in with tech, consumer discretionary, and consumer staples. So that's kind of the stuff I'm looking at now. On the crypto front, you saw that with the energy output, that Tesla doesn't really want to. They're still holding on their treasury balances, Bitcoin, but kind of diverging their conviction on Bitcoin because of the amount of energy output from mining and the ecosystem as a whole. I think it might be swayed in a sense. His thoughts on energy output, I have to read more onto it, but I've heard things that they're actually not as high as what CNBC or some other media outlets are reporting. But I still have more reading to do on that. But I definitely bought the dips on Ethereum Classic, and Bitcoin. Almost timed it perfectly, actually, but that's pretty much just by luck. Bitcoin's in this phase of right around 50 to 60,000 as it's been since about the middle of February, and I'm still holding all of my coins since I have a year and a half ago. Stock to flow model still looks intact, and then that kind of gets me into the stuff I was just posting about. So I've been kind of reading more into on-chain analytics, where you can kind of glean some information by looking at certain data points on the blockchain. Glassnode is a platform I use to look at that data, and ARC posts about it periodically, on how they analyze the on-chain data points, and that's where I was getting those charts from. So the first one goes through coin time destroyed, which is just really another way of putting Bitcoin transactions in a reference of time. I put an example out there. If I, bought 2 coins today, held them for 7 days, and then sold them, that's 14 days of coin time destroyed. So it's pretty much putting the reference of transactions into a time. And you tend to see this increase having a selling pressure as individuals start to transact out of the coins that they're holding. And then started talking about Bitcoin's supply that are in a profit status versus in a loss status. Essentially, what are the percentage of coins or the dollar amount of coins that are in profit, so the current price is above their cost basis, or in loss. And when you see that divergence of coins in loss status over coins in profit status, that tends to be a bottoming out in Bitcoin's price. I don't think we're anywhere close to that. I still think Bitcoin can run for, the next 6 months. At that point, that's where we get into the later times from the halving event that occurred in May of 2020. But I still think there's a moderate runway ahead for some increases. I'm still hoping for, and I say hoping, it's an educated guess. Obviously, no one can predict the future, but I'm still modeling towards about 80,000 by the end of the year. Um, and then just some other stuff that I posted on it in that thread. I highly recommend, if you're interested in Bitcoin, to check out Glassnode or some other on-chain analytic data companies. There are some premium services that they offer, but they also offer a lot of content for free that I think is pretty invaluable.
Sweet. Any questions on that Twitter? I know that you're asking.
No, I was just I saw the data and I was looking at it. It was pretty interesting. I just wanted to get a little more thoughts on it.
Yeah, ARK's putting out a 3-part series on how they're viewing Bitcoin as an asset class. They kind of talk about it in this pyramid landscape, where the bottom layer of the pyramid is network health. And this kind of assesses like the general state of the network, security, integrity, transparency, all that stuff. And then it goes up into the second layer, which is buyer and seller behavior. And this goes into the stuff that I just posted on my thread, like HODL waves, coin days destroyed, realized cap, market cap, that kind of stuff. And then the third layer, which they didn't put out an article yet, is asset valuation, which pretty much uses the first 2 layers to form a thesis and then kind of ties that in with where prices currently are.
Sweet, sweet, love it. Thank you, Lamonti, for the insight. Just gonna keep on moving for now, and we'll come back around. Decade, you want to go next?
Yeah, I'll hop on here. So this week, I mean, Lamonti kind of just mentioned a little bit briefly, just the market. There was that dip that occurred, end of Wednesday, beginning of Thursday, kind of, in the overall market. Just looking at the S&P 500 in general, around Wednesday, just for the week, we were down almost 4%, just in the S&P 500 as an index. So, great opportunity this week to lower into, again, I do, let me preface by saying I do, just simple index fund ETF investing, broad market. So when I say, there was a dip, I don't mean every single stock dipped. Obviously, that's not the case. But in this case, the S&P 500 had a nearly a 4% drop this week. End of Wednesday, beginning of Thursday was where that 4% drop price hit. Great opportunity there to buy. Right, there's not many times in week chart that you're going to see the S&P 500 have a 4% drop. It's more apparent in this market, as this market is pretty volatile, but historically speaking, not usually the case. You see that, so great opportunity there to buy a great index for a cheaper price than what you would before. So I bought some of that, the VOO as well, the S&P 500. But moving on to the ETF that I always talk about is QQ. It's a growth focused ETF. It's the top 101 to 200 largest stocks listed on the Nasdaq. It's literally called the next gen ETF for the Nasdaq. So great opportunity there this week. I mean, this week we were sitting almost, there was a couple of times where it almost hit under $30, where that price for that ETF is not really seen. Last seen in last October, November time period. So, or, late December as well. But it's been a while since we saw under 30 for that ETF. So anytime you can get it near the 30s, the 20s, I'm buying up while I can. So I definitely saw the opportunity there and pounced on it. So, I think this market here, we have certain days where it seems like what the heck's going on, and we have other days where it's like, okay, this kind of makes sense. But in the week to week look, it's like this doesn't make sense. But this doesn't make sense. Market brings us opportunities, right? So that volatility brings you opportunity. That brings you opportunity for certain stocks or funds that you like long term, or even if you're trading, news breaks about it, or something happens where there's a sell off, or there's a run up, and for really no other reason, for maybe that news was, let's say Tesla stops accepting Bitcoin, right? So Bitcoin sells off. Well, there's if you like Bitcoin long term, there's an opportunity, right? So following your stocks or your funds that you like long term, really allow you to see the day-to-day volatility, especially in this market, that one day it's like the stock's down, individual stock could be down, 20, 10%, and the next day it's up, you know, 20, 30%. So it doesn't make sense, right? But because it doesn't make sense, it allows you to have buying opportunities within that it doesn't make sense market. So, I think the biggest takeaway this week, I feel like I have the same, every time I'm on here, the same kind of talk is, you know, each week's going to bring something new. But because of that, it's going to allow you to have new opportunities that you might not have had last week. But also there's opportunity in the following weeks that you can use from this week, learn from it, and next week be ready for that same opportunity. So that's where I this week and every week, every time I see these dips occur or these sell-offs occur, whether they're warranted or not for that stock or that fund, if I'm in it for the long term, which I am, I'm buying more, right? A stock price doesn't determine the goodness of a company, right? I always say this is the stock price and the company itself, they're not together, not tied together, right? So the company can't set the stock price, and the stock price doesn't mean the company's good or bad. I remember there's an interview with Jeff Bezos, and he was saying, and I think it was 1999, I believe, he was saying he was watching Amazon stock price. Actually, no, it was like 2001. He said, I saw Amazon stock price crashing, but I saw all of our internal metrics, like number of customers, number of orders, revenue, all of that dramatically increasing, right? So sometimes the stock price isn't always going to tell the true picture of the company. So you can use that piece of information to your advantage whenever you're investing into whatever you're investing into, right? So don't always let the stock price, um, you know, allow you or cause you to run away from good companies, because the stock price is not connected with the company. Something could break about news could break about the company, whether it's good or bad news, cause a change in the stock price. But that doesn't really, I mean, depending upon the news, doesn't change the true direction of the company itself. So just something to keep in mind as, we do these weekly talks. The market's always volatile in the short term, but that volatility brings opportunity. So once you realize that opportunity is there, you can change your mindset and from, oh my gosh, why is my stocks or my holdings down 6% today or 5% today or 10% today? It's more of, okay, my stocks or my shares are down 10%. Where's the opportunity to buy that recovery here in the next day or week or whatever it may be? So that's kind of what I always like to talk about, is just those volatility brings opportunity.
Absolutely. So besides QQQJ, did you make any other purchases?
Yeah, so actually, I bought some QQJ, and then I bought VOO, and then I also have VXF, which is what that is it's the basically every stock in the United States other than the S&P 500. So if you put VOO and you put VXF together, that creates VTI, which is the total U.S. market. And the reason I have them separate is because since I'm younger, I want to get a little bit more in the growth and play a little bit more risky in that sense. So I can kind of manually decide the weightings of the S&P 500 and the non-S&P 500 U.S. stocks, because VTI is comprised of about 82% of the S&P 500 companies. So that leaves only about, what would that be, 18% of VTI is in the small cap, mid cap companies. I want to have a little bit more just because of my age and my risk, acceptance. So that's why I've split it up manually and can kind of create my own VTI weighting that way.
Very cool. Very cool. It's clear that you've really thought through it. So that's awesome. And everybody should check out Decade's page. I learn a ton from them each week, and you're a really nice kind of stability in the market. So appreciate you coming on. I'm gonna move along. Oh, yep.
Oh, I was gonna say thank you, and thanks for having me.
Yeah, always, man. Just gonna move along a little bit with my speakers. And I appreciate the speakers keeping it to around the 7-minute-ish time slots. I think that's a really good amount. So let's go to risk versus reward. We were chatting this morning. It sounds like you had a fun finish to the week. So maybe you could talk with us about what you kind of were buying and selling this week.
Yeah, it's funny listening to Decade Investor talk about taking on some more risk by making his own kind of VTI with the index funds was it made me kind of realize, wow, I take on a lot of risk. I'm definitely riskier than that. So, that's it's funny how much you can do in the market. Um, so basically, for me right now, Lamonti spoke on the transition to value, and that's a big picture move that I'm working on. I do trade options, but I'm taking specifically leaps in a lot of value names, specifically British American Tobacco. Me and Wolf Gavi talked about it on his podcast. Basically, like Lamonti was saying, if we see this after that divergence, if we see this shift to value transition throughout the uh, majority of the year, or even potentially a even bigger shift, it doesn't have to mean growth names get killed. It just is a transition that some of these high dividend stocks get repriced to a point where they're trading at a little bit higher price to earnings. The dividend is going to be a little lower because of the market conditions. It doesn't need to be that these companies accelerate their growth on their value stocks for a reason. But in certain markets, if that happens, the leaps could potentially be 10x opportunities. And that was something that I'm kind of letting watch play out. Right now, they're at about 3 times what they were in February for most companies like British American Tobacco, AT&T, Verizon, all of those type of Altria companies that are at a lower dividend. I mean, a higher dividend paying at a low price to earnings. So that's a big picture move that I'm working on, and I kind of add whenever they're down the last couple months. And those are calls for even 2022 and 2023. In terms of the short term, I have a note on my desk it says March 17th. It says, one, sometimes the best buy is puts, because no one likes to take puts, but I got to remind myself that. And it says, two, melt up into summer, but true shift the value. And I wrote this on March 17th to remind myself that, like, when stuff got bad potentially before summer, to remember that I had melt up into summer, but true shift to value. And the reason I kind of see that still happening is because you kind of saw the S&P continue to run to all-time highs while growth got killed, and nobody's really done with their growth names. They're all hoping for another rally, even potentially new highs to be made. Everyone wants this crazy run, and because we got to see all-time highs with growth getting hit so hard, I think we might see another push in all these names into summer. I don't know what happens after that. I don't even know that that's going to happen. All right. I just put this on March 17th and I'm sticking to it because it's sometimes easier to remember what you were saying a few months back than it is to see what's going on in the moment. And since it kind of is playing out that way to be possible, I'm taking a lot of my favorite companies and I'm just kind of adding to those few names more aggressively right now. And I'm also taking some options and growth names for June, like Gavi wrote. It was a good day today. We'll see what happens. That's not So to talk about some of those names though, or one of those names, I guess, while I have 3 minutes. Rush Street Interactive, I posted a thread about after their earnings just 2 days ago or yesterday. And they went down today. They were down another 6% at one point today. They're down over 50% from their highs. I was originally in at 10, but I bought as high as 20. And what Rush Street Interactive is they're a casino operator for online gambling. They also do sports betting, but the casino side is where they specialize. And everyone's looking at the fancy names like DraftKings and Penn because it's what we use. But people forget about the market caps and the size of these companies. And when DraftKings and Penn DraftKings went to a 40 billion valuation. Rush Street was sitting at a 3 billion valuation, but they're spending 30% of their revenue on marketing and advertising when DraftKings was spending over 100%. I'm not trying to say DraftKings is not a great long-term position, but the potential for growth right now in a smaller operator that's trying to become profitable faster, at the very least, they'll be able to be bought out if they don't become a company that could potentially buy out smaller companies. They raised their guidance after earnings, and they also beat earnings the last 2 quarters. They're going to continually do that because they don't put any of the future states that are going to be legalized in their projections. So the online gambling space in general right now, these beats, and then people are upset they fall or raise. You're looking for states to be legalized. The numbers they're going to put up are going to continually be, 200% year over year, whatnot, until the whole entire U.S. has legalized online gambling. So it's a really long-term perspective there. Down 50%, more than 50% from highs. It's an interesting play. I've been adding 100 shares a day. So to talk back to the VTI conversation, since it fell below $13, and eventually, right, I can't do that forever. My cash position, I'm going to keep some cash, but I'm adding 100 shares a day right now while it's below $15. And yeah, I guess that's what I'm doing. That's my main. Oh, and then you said today, while I have the last 30 seconds for fun, we were on a Lotto Friday Twitter space this morning. And when the market opened up, we jumped on $33 Neo calls in this space when they were at 5 cents. They peaked at 80 some cents. I didn't, I sold the whole way up. But that was fun. We made $1,000. So that was fun.
Awesome, man. Yeah, that was definitely a fun one in the morning. Appreciate you coming on. Definitely some more, as you can see, risk versus reward in the name there. It's pretty implied. So appreciate you sharing. All right, moving on to Twitter investors. You had a lot of spaces this week. I hope that you were placing some trades during that time. I hope you got some sleep. I went to sleep and you were on a space, and I woke up and you were on a space. And you're in a different time zone, which means I don't know if you were sleeping. So you're pretty dedicated to this. So maybe you can chat with us about your week in the market.
Yeah, I hear you. Sorry about that. No, I haven't really got that much sleep, which is weird, but like I'm not really tired right now, I guess. Maybe it's the adrenaline. I'm unsure. I'm sure you guys can kind of hear music. Sorry about that. I'm at a Starbucks right now. So yeah, I mean, I've held tons of spaces this past week. So interesting to see. Last night we had a huge kind of bull versus bear on Tesla discussion. It seems like right now the consensus on the letter you it seems like right now the consensus on the letter you put out issue of Bitcoin, he had previously kind of debunked, mostly kind of in that letter, mostly lawyer talk. Now the consensus give rise to Doge is still like a large question, as the current state of the coin is pretty inferior to Bitcoin and others. It's going to be yet to be seen. It's going to be yet to be seen really what efforts his engineers that he's talking about bring to the table on that coin. But I mean, there is something to be said kind of about. We were making this case yesterday about market manipulation. Um, it seems clear that there's correlation between both him tweeting and the price of the coin moving. Now, that's obviously only one part of it. We see that there is probably there's some kind of correlation there, but there's no clue if he also owns Doge, right? Which would be the other kind of part of that there's financial interest there. There's always speculation over kind of who the big wallets are. No one knows yet. We know the kid maybe has some Doge because Elon. So I don't know. We'll see if the SEC decides to step in. It's also interesting to know how, like, almost every single space I've had over the last 2 weeks, I've had one almost every day. Like, the conversation either starts or ends with Elon. And it's just interesting. Like, we're not sitting here talking about really any other CEO, at least over the past week. Obviously, last year we had a huge run up in price, plus we had the SNL show, so maybe it was fitting. But still, we're continuing to talk about him with his tweets. I mean, there's no other CEO, I believe, that has that big of a following. So it's interesting to see. Now, as far as my positions go, I no longer really trade at all, so I didn't add anything in terms of like intraday or intra-week or anything like that. I didn't add to any of my long-term positions. I didn't buy the Bitcoin dip. I'm starting to move into more cash as a percent of my portfolio. A feeling is more the market's kind of overvalued, and there's mania and kind of both the crypto and equities markets. Obviously, stocks just getting killed. Mania and crypto over Rocket and all these other crazy tokens. And I think as you start to see next month, possibly you start to see rates rise, there might be a lot of issues. So that's just me. I'm just moving to a little bit of cash. And just going to continue these spaces. I love them. I like to just kind of sit back and listen to, got a lot of smart people on there. I've had Lamonti and Risk Particular Reward, and Luke's been in there, I think, yesterday. So it's going to be interesting. That's kind of an update on me and what I've been noticing the past 6 weeks or so.
Cool, man. Appreciate it. Yeah, little tough to hear, but I think I got most of it. But yeah, keep doing what you're doing, dude. We're gonna obviously continue to collaborate on more stuff. I think we're gonna have a space on Wednesday. Decade, I think it's gonna be on that too. So more info coming on that. I see Luke is reconnecting. Um, is Luke on here currently? I think he just kind of got booted. All right. While he's waiting to reconnect, yo, Hero, can you chat with us?
Yeah, what's up, Gav?
Hey, dude. Doing good. Having a good Friday. Everything good by you? You in the car?
Yeah, man. I am headed to the lake to go fishing, so I've got a good hour to kill. So I off the grid a little bit this weekend, but there was plenty of Twitter action throughout the week, so it's needed.
Big fishing guy. I love it. Cool. Well, you want to just give us a quick, couple minutes on anything you bought and sold this week?
Yeah, absolutely. Certainly a crazy week. Seems like a lot of growth stocks ended up, after today's rally, ended right back where they were on Monday. So was a positive way to end the week, but on a longer term view, there's still a lot of stuff that's down 40 and 50%. So my newest purchase for my portfolio is Airbnb. I bought more. I first purchased it last week or 2 weeks ago, and then it just keeps going down. So I've been averaging down on that, and then they reported earnings yesterday. So this is a long-term hold for me. I'm not expecting any kind of quick returns or anything like that, but I'm a frequent user of Airbnb. Anytime I travel, that's one of the first places I look to book listings, and so I'm along for the journey. I'm excited to see how they develop as a publicly traded company, what kind of challenges come their way, and how leadership overcomes it. And this is a stock that I'm excited to own for many years, and I know the valuation is rich right now, and it might even trade sideways for a while, but I'm a pretty big believer in investing what you know and investing the products that you actually use all the time. And I use Airbnb, and I like using it, and so I'm more than comfortable holding it through volatility. And then just on a shorter term basis, this summer, with everything opening back up and mask mandates getting rolled back and more people getting vaccinated, travel demand is surging. This whole summer people are going to be traveling, and lots of people love to use Airbnbs, and so I can't help but think they're going to benefit from the everything reopening. And then just on a longer term view, we'll see how they handle more challenges that come down the road. I was able to snag Teladoc under 140, averaging down on it. This one has been painful to own, but I'm 23, so I'll just hold it. I'm not in any hurry to get a quick return and sell it. So I'm excited for what the future holds for Teladoc. Besides that, a lot of stocks in my portfolio: Home Depot, Waste Management, Carrier, Digital Realty Trust. Just a lot of names like that had already been at all-time highs. Obviously, most of the sell-off, most of your discounts lately are in the growth names, and so Not really any. I'm not really eyeing any opportunities in that. I think Home Depot was down a little bit today, but it's 1 or 2% off of all-time highs. I'm going to kind of let that run its course. If we get a major shift back to growth and Home Depot starts to sell off a little bit too aggressively, I'll definitely snag some. I love this name long term, but and especially, even the indexes. I added some QQQJ, just like 5 shares, but even just the major indexes weren't even down a significant amount. It was mostly just the SPACs or the former SPACs and some of the high multiple growth names. So it was an interesting week. Definitely a lot of blood in the water, but a very strong ending, and hopefully that continues into next week.
Yeah, I hear you, man. I hope it's not a fake out. Absolutely. So I'm looking at Airbnb. Does look pretty nice. I think a lot of people didn't want to buy it after that major run up, but it's basically back to the IPO price. It's sitting at 141. That day it IPO'd was 144, fell to 124. It's a bit like catching a lot of feedback coming from you real quick, Hero. Hero. Yeah, a lot of feedback. If it does fall further, if it was to hit the 120 range, I would definitely be a buyer because that would be, I mean, that would be basically its all-time low, immediately following that IPO. So actually, that's a really good call. People have come on here over the past few weeks and talked about Airbnb. I hope it's, going to catch at some point soon. But yeah, I agree. It's such a go-to name, and they've really built a DNA unlike anything else. And I was talking with other people, and apparently there's 2 main competitors, but I hadn't even heard of them. Um, so that's that doesn't mean that's the end all be all. But yeah, what did you say?
Yeah, and I was just going to add on to that. Airbnb is certainly it certainly is a tech company. It'll always be richly valued. One thing that I think is really cool that they're doing, and I've noticed over the couple years that I've been using Airbnb, is their integration with creating an entire travel experience within the app. So you go to book your Airbnb, and they're already recommending restaurants. They're recommending sites to see in wherever you're visiting, and they're focusing on so much more than, hey, book a place to stay. They're curating that complete experience for you, and so they have built out their whole platform and their whole app and website and everything around this whole travel experience. It's less transactional, like booking a hotel room. You just go on the site and book a hotel room. But you go on Airbnb and you can explore cities, you can do all kinds of stuff, and they're pushing that your way. And so it seems like they're an innovator, and they really are disrupting the travel industry.
Hey, Divide.
I'm excited about it for a long-term hold.
Divide, I'm just going to add, for those that are interested in that sector, I think a couple other names to look at. One would be Tripadvisor, which has kind of centered their business around that destination guide and creating a complete experience. And they have exposure to that vacation rental market, capturing, a spread on the transactions that they're advertising. And then the other one to look at would be Expedia Group, which spun off originally off of IAC, Barry Lillard's company, and subsequently they acquired HomeAway, which owned VRBO and a collection of other websites that were focused entirely on the vacation rental market. And so with Expedia, I think there is some regulatory overhang that's impending over the coming years with the vacation rental market. With Expedia, I think it's a little bit diversified in terms of cash flow tied to the underlying business and getting that exposure that you want to the vacation rental market while also securing cash flows from the hotel business, which is a legacy business that they operate in, flights, hotels, et cetera. But historically in the travel sector, on the flights, you make little to nothing. On the cars, you make a little bit more. And then the hotels is where you make the most amount of money. So just some thoughts for people listening.
Good calls. Yeah. I see the TripAdvisor one. I don't know if I want to try to catch that right now. When you look at their 5 year is nuts. But definitely Expedia. That could be really interesting. So appreciate that input, Portfolio Hawk. So I'm gonna roll to Luke real quick, who's also a planned speaker for this. So Luke, thanks for joining.
Hey, how's it going? So,
Living the dream, man.
As always. But so this week, it was a volatile week, a lot of ups and downs, a lot of those growth names, seeing a lot of downside. So really, I made two moves this week through multiple trades, and it was adding to a smaller position in ARK's FinTech ETF, and then I continued to add to my Qualcomm position. The long-term runway for semiconductors is going to be significant. Qualcomm's a solid company in the space. I own AMD also, but Qualcomm was, it just underperformed, and they actually reported solid numbers not too long ago. But this week it got caught up in that growth sell-off, and it hit a level to the point where I wanted to add to it because it was a smaller position in my portfolio. So I upped that position. And then when it comes to the FinTech ETF, ARK, I also like that. Really, I wanted a basket. The point of this position was I wanted a basket of FinTech names. So many of them were coming down the more reasonable prices. So I look at their holdings, Square, Shopify, Zillow, PayPal, CLTD, Pinterest, JD. So I found that very interesting, added some to that. But really taking a look at the broader market, those inflation fears kind of gripped the market again this week. And I think until the Fed proves to retail investors and really investors as a whole, until it proves that inflation is transitory, I think you're going to continue those inflation fears hang around. But really, that's what I saw in the markets this week. I'm on vacation this week as well. So, I'm kind of just been laying back, adding to smaller positions in my portfolio that I want to increase. When it comes to names that I'm eyeing, we saw Disney report earnings yesterday. Fantastic. It was kind of I wouldn't say it wasn't terrific, but it wasn't terrible. It was kind of just a flat quarter, in my opinion. A lot of positives and some negatives. I can say firsthand that the amount of people that are going on vacation is crazy. So digging into some of those vacation names, those travel names, wouldn't be too bad of a go-to. Now, when it comes to another name in my portfolio, Boeing, I continue to like Boeing. It's gotten hit in the past few weeks here. Part of it, I think, is it had such a run up a few months ago. I think it's just, taken some off, and then a mix of those negative headlines with electrical issues. I think in the long term, that's just going to be a short term effect. I think the company's getting stuff figured out. Also, this inflation stuff, and we've talked about it, these inflation fears seem to be pushing a lot of people towards value. And I like a lot of those value names. Part of my issue is that some of these value names are hitting levels, quite extended levels in my opinion. But I like a few of them. So I'm eyeing some opportunities there. One name I'm digging into at the moment that I'm not going to expand on too much, but I'm digging into is Cleveland Cliffs. The valuation on that one is not terrible compared to a lot of its competitors. So into that one, see what's going on. And then lastly, SPACs continue to be all the rage as well as crypto. We've seen crypto kind of, take a grip lately. It's crazy. Sentiment on crypto is just through the roof at the moment. So I think that's partially also some of the confusion in the markets this week. The crypto market was also just had all of these headlines in news just erupting. So that creates even more confusion. But really, look at SPACs, and the only SPAC I've really been focused on is PSTH. And that got a little shred of news. Ackman saying he's been in negotiations with the target for just about, I think he said 7 months, since early November. So that is the first shred of news we've gotten in a very long time on that particular SPAC. And the way it's formatted, I think is definitely one of the better ones. But really, that's been my week. Chilling out, adding to smaller positions that I have higher conviction in, watching the market and continuing to eye opportunities. Really, if you have that long-term mindset, as a lot of speakers here have talked about, and you're investing in fundamentally strong names for the long term that have a bright future in growing industries, I think you're setting yourself up for success. The fintech is one space that I think has a lot of growth going for it in the future. But really, that's been my week, a crazy week, exciting week, a lot of opportunities.
Nice, Luke. I hope you're enjoying the vacation too. Anywhere nice?
Yeah, down here in
It-
Florida, southern Florida. So it's been great weather.
Hell yeah. And definitely I agree with you. There's been a massive amount, I feel like, of feel like it's a bit of an information overload, and it's pretty obvious with, this week just exemplifies what the internet can do to the market when you have, day by day, these 10-20% moves in assets. Um, as just news breaks and people just start moving, and obviously institutions are moving as well, highly influenced by the same news that is happening. I get some of my favorite DMs that I get throughout the day are a lot of people send me kind of the institutional moves, some of the buys and sells that are happening there, just to watch some of the much larger purchases and how those are happening, and then they can kind of correlate it with some news that's coming out. So obviously just way up and down. I think more down than up, unfortunately, unless you were playing it right. uh, yeah. Do you have anything on that?
Yeah, definitely. This week has just been, I think, a media frenzy week. And I think that's really some of the confusion. If you take a look, you got the inflation fears, you got all the crypto news, and then you got earnings on top of that from a lot of significant companies. So between earnings, inflation fears, crypto news, and then, of course, you have everything outside of that. I think it just led to a week of a lot of confusion, a lot of people trying to get through information quickly, and just so much information. I think it comes down to, in my opinion, you got to stay focused on what you want to focus on when there's this much news, and you just got to maintain your thesis, stick to your plan, because there's so much outside news that can affect even individual names in your portfolio, that has nothing to do with the company that you're investing in itself. So I agree. Just a media crazy week, a lot of headlines. And I guess we'll see, hopefully in the next few weeks and months, it calms down and we get more to a normal social sentiment instead of this very hyper, quick moving sentiment.
Yeah. There's just a crazy amount of sentiment each way. All right, we're just gonna keep on rolling. So stock market news. We are going to be collaborating on a space tomorrow. We got some time to chat this week. It was really nice, kind of getting to know you a little better, and I'd love to hear kind of from you, maybe some of what you were buying and selling this week, and then if you want to, chat a little bit about what we're going to be doing tomorrow, and just let the people know, that would be cool too.
All right, well, what's up, man? Honestly, guys, I'm a little bit tired today. I feel like you guys were just talking on a really busy news week, so I've just been watching and paying close attention, and it's been a long week. But so quickly, I'll talk about my moves and what I was doing and what I'm seeing, and then we'll talk about what me and Wolf got planned for tomorrow. Very excited for that. So pretty much just a quick preface. I always say this, but I'm a long-term investor. I tend to stay in larger positions, larger, blue chip. I don't blue chip S companies, not always. My largest holdings are Apple, Facebook, Tesla, those type of names. Um, I do go into some smaller growth names on the side of the portfolio, but the main holdings in the portfolio is that. So I really added. I didn't actually do as much as I normally do this week. I was much more focused on the news flow and everything like that. So I started off the week. I'm going to count Sunday as part of the week. Was selling a little bit of Doge. It was around 69.70 cents, or this might have even been Saturday, but doing that. Then I came in on Monday and bought into, or dollar cost averaged into positions I already had in Palantir, Amazon, and Alibaba. And then I follow that up with moves on Wednesday, DCAs twice into Amazon, a little bit into Skyworks, and a little bit into Penn, and then some into QYLD as well. So I'll quickly go into those. QYLD is basically a fund that holds NASDAQ 100 stocks and then sells covered calls against them. They pay out dividends monthly. I really love to use it kind of as like a piggy bank thing or whatever on the side. So I try and throw in some cash into that, but that's just one thing that I like. And then Penn National, when it dipped under 80, I've been trying to add a little bit as it dips. Around every single $10, I've been picking up a little bit more. For me, Penn is a position I hold with the cost basis around. It was around 12. It's now at 14. It's probably even a little bit higher. Maybe now it's gonna towering up, but it's a position I really like coming down here. And then Amazon, Skyworks, and Alibaba are just three names in my portfolio that kind of are stuck in the middle. I want to say like, 6 to 10 type holding range. And I do want to move them up into maybe closer to the top five. So we'll see how that goes. But those are definitely, I'd say Amazon is one thing that I've been watching very closely. And, if it moves down further, if it gets back to, 3150, 3K range, definitely under 3K, then I'll be stacking up there. And then another one that I'm excited about that I've been kind of talking about in conjunction with Amazon is Nvidia. It's definitely semiconductor outside, not the same type of business as Amazon, but I do kind of put them together sometimes. And then just to quickly talk about the event that me and Wolf have going on tomorrow. It's just a Twitter Spaces, but I'm really excited for it. It's about Kathy Wood, ARK Invest, their trade moves from the week, their trade activity from the week, and really just any ARK related topics in general. I'm trying to get some really big people on to come and talk. I see a lot of big FinTwit people in here, so I would love to get some of your guys' opinions on Kathy. She went from being extremely loved for a long time to getting to the point where it was cult like, and now we are at the point where everyone, it's cool to hate on Kathy. So there's definitely some fans there, and I love to hear the opinion of both sides, and we're gonna get that tomorrow. I try to get an equal amount of people who could give us some good opinions and who could try and color it a little bit more from the other side. But we're really excited for that tomorrow. So it will be at 2:30 p.m. Eastern time. Not 100% sure if it will be me or Wolf hosting it, but one of us. So just, if you're pretty much following either of us or both of us, you'll see that.
Absolutely. Very excited for it. I appreciate you sharing, as always, the trades that you made this week and coming on. And definitely try and get some rest tonight, man.
100%, man. I'm ready for tomorrow already.
Cool, cool. Awesome. I'm going to keep it moving. All right, Portfolio Hawk, you've waited patiently. I would love to hear from you, kind of, some of the moves that you made this week, if you're cool sharing them.
Well, look, I really would rather not share, but
That
I
is totally
also,
fine. You could also, I know that you had opinions on what some other people said. I'm sure, you always do. So maybe if you had some stuff that you didn't get a chance to say, you could share some of that.
yeah, no, I mean, I think what I would say is without, derailing the conversation at hand, I'd love to hear the opinions of some of the folks in here in terms of, a more macro look as to where they see the market going. And, I think anyone that's watched market cycles, this looks to me like, what normally happens. You have a huge bull run, and before you go into or during a cyclical bear, which can typically last for 2 years, 18 months, 24 months, you see these cycles where you'll have a lot of red days, and then you'll get these big spikes on up days. And what it does is it creates this vicious cycle of the long list of investors that were speculating in years prior, and they see this opportunity to start making the kind of money that they were, again, with these single 1 day moves. And subsequently, you see the next 2, 3, 4 days go down again. And you get into this vicious cycle where people buy on the up days and sell on the down days. And they keep going until they either wipe out their account or the market, has finished the cycle, and we go back into a cyclical bullish bull market. And so just would love to hear some of the thoughts from the people in here.
Sure.
I've
So yeah, I'll throw that over to risk versus reward, and then I will give. I have one other person who I wanted to give time to speak kind of about their trades. But yeah, go ahead, risk versus reward.
I came in. I think I was talking a little faster on the first time, but really what he just said is the basis of why I'm doing the exact series of moves I'm doing. Right. So I have in playing the hopeful cyclical move. I'm trying because I'm young, and I'm trying to actually make I'm trying to make substantial money in a way, but without doing it the way that I did last year. And that's why the approach to options with the value names. It's not the safe way of doing it. The value names I talk about, you could easily buy them and take the 7% dividend. So I'm not recommending, everyone goes out and just buys options, but that's how I'm playing that potential cyclical side. In terms of the side of, what do we do on these great up days, but then there's a selection of down days. My 10-year out holdings that I want to have, no matter what for this decade, at least in my mind. I know that's hard to say. We never know what's going to happen. We have to be somewhat reactionary. But the holdings that I plan to hold for the remainder of the decade, I'm adding only when they're in the most, continual pain. I've been adding, like I said, Rush Street through every down day. I just keep buying right now. And, on the up days, maybe I'll trim a little bit. If they have a big swing, I'll definitely trim. But my plan is to be loading up as they keep falling. And those are the far out holdings. And then when I brought up a potential like run into summer that excites people, but isn't the, it might get some people to buy this, second top, that in a bigger picture way. That's why I'm playing some of those most beaten up growth names with options into summer. This is a risky way of doing it. But what Portfolio is saying is the three bases that are really leading me to that. I'm hoping that people do get, it's unfortunate, but I'm hoping people rush into an exciting summer thinking that there's going to be another run like we felt. A call came in and that stopped this, but I'm hoping people think that, and I can have these shorter term options that can have nice returns and get out quick. I'm not buying those stocks because I'm not trying to play them for another bull run like we just had. And so that's those three steps that kind of are doing what Portfolio is doing, but in a more risky way. The safe way would be to buy these dividend stocks we talked about, take the 7% yields, and if they appreciate as well, you win on both fronts. Wolf, I know I don't. If someone else wants to answer, I can talk about the giveaway at the end, or
yeah, real quick. Risk versus Reward is doing a little giveaway, so yeah, give us 30 seconds on that.
Yeah, so guys, I had an idea. I basically am starting a little account that's going to be people vote on a stock each week, and at the end of the month, if there's profits, half the profits are going to go back to someone that follows me, voted, and liked or commented, so I can see that they liked or commented because I can't see who voted. And half the profits are going to roll over to the next month to hopefully grow the account. For now, if it ends, down 200, I'm just going to put it back to 1,000. Some people keep getting asked, why I'm giving away money, but hopefully we make money as a group, and it ends up not being a big loss. If I end up, giving away thousands of dollars over time, and I have to stop it eventually, sure, I don't know, that's not the plan, but I want to do this. I want to give back. I had a crazy year, and a big part of my Spaces conversations with people is that a lot of that's luck. Anybody could have gotten lucky on a few things. Of course, there's knowledge and skill that leads to some things, but not a 4,000% returns. No, like that I was just lucky enough to study accounting and know how to trade. That doesn't mean I that kind of success is not skill. That's a lot of luck, and so I want to give back. So
cool. Well, yeah, definitely check out Risk versus Reward for that.
I'll
All right,
link it
DC. Yeah, feel free to drop that link. Yep. DC Finance, you're in here. Are you able to speak?
Yeah, absolutely.
Awesome. Are
Today
you? Yeah, go for it.
I closed out my JP Morgan put spread in July, and I only had that for 2 days and got $1 out of each contract. So that was fantastic. And then I had NDX spread. That was a quick. I kind of sold the fear there in the middle of the week. That was fantastic. They're pretty boring. There's not a whole lot of upside. Try to get 50% out before I close it, sometimes 25%. Hold on, kiddo. But the biggest reason I wanted to come up here was to remind everybody. Hold on, I lost my headphones.
Oh, good. It was the classic pause for effect.
So Monday is the IRS's extended limit for Roth IRA contributions. And if you don't have a Roth IRA and you're in this chat, go to your computer and open one up, even if you just have to roll over a partial 401k. So on Monday, you can contribute your deadline, and then Tuesday, it's a whole new year. So it's a great way to have some fun with these options for over the long term.
Absolutely. I recommend everyone has a Roth IRA as well. I use Fidelity for mine. If you're unfamiliar with how to make one, it is very, very simple. Just Google how to make a Roth IRA Fidelity or how to make a Roth IRA, whatever brokerage you prefer. It'll take you probably 10 minutes. And then the benefits to that for anyone who's unfamiliar is when you put money into the Roth IRA, you're putting in money that you already taxed on. So it's taxable income. So you earn money from your job. They took out the taxes already. You then put that money in, and then you have to invest it once it's inside. You can't just put it in. You have to actually take it and put it into stocks inside of that. But once you do that, any gains that you make on that are not taxed. Any capital gains that you have, you will not have to be taxed on when you withdraw that money versus a traditional IRA, which works the opposite way around, where you don't pay taxes beforehand and then you would pay taxes when you take it out. And the idea with the Roth IRA is you are going to be at a higher tax bracket in the future when you want to take that money out because you'll have made money over time. So the hope is that you will not have to pay taxes at that higher tax bracket. Works really well for a lot of people. I'm decently young, pretty young. And so for myself, it's very beneficial to have this where, I'm in a basically one of the bottom tax brackets now, but hopefully in the future I won't be. So that's kind of what's going on there. So thank you, DC Finance, for bringing that in. Okay.
Yeah, it's so
Mhm.
important. All the new participants in the market over the last year, they don't know this stuff. And if it's your girlfriend or your cousin or your neighbor who's talking about stocks, drop that note in their ear. The Roth IRA, because it's hard to lose if you go long in your Roth and you have a 30-year time horizon, right?
Yeah, exactly, right. Over time, the United States stock market goes up, especially over decades. Uh, I mean, it could technically go down, but we haven't seen that happen. So we're just looking at what we know from history, especially if you're in certain, less risky assets, certain companies which have proven that they can stick around for a long time, that they're not going to go bankrupt. It is important that certain stocks do go down, that they do go bankrupt. That's an important part of the market. That's competition. It's capitalism. But overall, if you build a diversified portfolio and you can have things like VTI or VOO, if you really don't want to have to take a risky approach to it, then those can be beneficial. Yeah, DC.
Yeah, just all the sectors. You can really pick great sector ETFs. And like I use Tasty Trade for me and my wife's IRA, and I trade them more aggressively than I do my brokerage account because it's there and you don't have to worry about the short term capital gains. So it's fantastic.
Absolutely. That's a great point, right? A great way to avoid the short-term capital gains as well is to put it in and go pretty hard with those. All right, Lamonti, you haven't. It's been about 45 minutes since you spoke. I wanted to hear maybe come back to you if there's anything that's kind of come up that you had any thoughts on that you wanted to share kind of throughout this call.
Yeah, so I think back to DC Finance was kind of asking about the macro landscape, and I always love talking about macroeconomics. It's what I kind of do for my job. It's what I went to school for. But from a macro side, I can really try to break it down into 3 points that I'm looking forward to here in the next, 3 to 6 months. Non-farm payrolls. Are we going to get less slack in the economy? Are we going to get more towards full employment as unemployment benefits start to unwind? And then that leads into average hourly earnings. Whether or not we see those tick up on how much corporations are willing to incentivize individuals to come back to the workplace. If we start to see that tick up, then it becomes inflationary talk where it's more of from a worker's perspective instead of an input price perspective, as well as then labor force participation rate. You'll see throughout recessionary periods, you'll have individuals that don't want to come back into the workforce or disincentivized to. Um, and as that starts to occur, you create this slack that doesn't really get captured in the unemployment rate. So, really looking at the labor force participation rate paired with the unemployment rate. Unemployment rate is currently at right around 6%. Labor force participation rate right around 62%. So looking for those paired together to tick back up, as well as watching non-farm payrolls to tick back up, as well as average hourly earnings because those kind of paired together. And the reason being is because it gives me an indication of how interest rates are going to move in the coming months and years. And then that really plays into the public equity markets on how you're viewing discount rates and opportunities, whether it be in fixed income versus equity or alternatives in real estate and things of that nature. And then just a couple of data points I wanted to point out. The 5-year forward inflation expectation rate. So you can pretty much back into this by taking 10-year nominal rates on a spread versus 5-year real rates. Those are currently holding at around 2.5%. I did talk about earlier, we had an inflation read of the mid 4% as we're coming off these bases. This gets into the whole transitory conversation, but it'll be interesting to see how that plays out going forward. And then lastly, I kind of shared this the other day on my Twitter, but I like looking at this. It's an interesting data point, is the percentage of constituents in an index above their 200-day moving average. So currently on the S&P 500, 92% of the constituents are above their 200-day moving average. On the Dow, it's starting to tick up. It's at right around 90%, 76% for the Russell 2000, and then for the NASDAQ composite, right around 71%. Across the board today, they did tick up, but they're still at elevated levels when you look at it from a historical perspective the last 5 years. So it'll be interesting to see how those play out. Technicals tend to follow fundamentals in the long term. And that's kind of how I'm viewing the macro landscape as it relates to portfolio allocation.
Awesome. Appreciate that insight. So real quick, just something I want to go over with everyone regarding the spaces. So if you're new to my spaces, just as an introduction, my name is Gav Blacksberg, and I'm the COO at Wolf Financial. In addition to running all of our social media accounts, I just pinned to the top of this a picture. So Wolf Financial is actually an entire app itself. I don't take the personality of a brand because I don't think anyone wants to be friends with a brand, and I want to be friends with people on here. But we are a brand. We have an app. We're building that. We work with about 50 different accounts across Twitter with cumulative followers of 6 million that are working with on this app. So trying to build it in the image. And basically, it's like if you really like Twitter, but when you come across a stock, you have to leave Twitter to go somewhere else to then research that stock or to get data on it or to get a graph or anything. This is essentially just bring that all together. So you get Twitter and then kind of a couple other social media features, but then all of your data and your portfolio and everything like that is all in one place. Long term, we hope for people to be able to trade on it. It's not that yet, but you should come check it out. So link is in my bio for that. We have a few thousand people already using it. We're just coming out of beta. So it's a really exciting time. You can check out pictures on my header. So actually, some of the people up here right now are people that have been working on that with me. Also, a lot of my full-time job is to basically put together content and spaces. So I have always been doing spaces for weeks and weeks now. I have multiple spaces upcoming. If you go to my pinned tweet, there is a Google Calendar that you can join. If it doesn't work for you, feel free to shoot me your email and I will add you to it. If you just join the Google Calendar, nobody can see your information. It is not shared publicly with anybody. It is completely private. I can't even see it. But I think that there's hundreds of people on there because I've gotten a lot of impressions on it. And that'll show you basically when all my spaces are. I add them to a public Google Calendar. So tomorrow we have a 2:30 p.m. EST with stock market news and several other big accounts that's going to be talking about ARKK transactions. On Sunday, there's going to be one at 2 p.m. That's going to be a financial fitness event hosted by Max Bezenko. There's going to be about a dozen speakers on that covering multiple areas of the gaming industry. Then on Monday, at 8:30 p.m. EST, there's going to be a technical analysis Twitter space. And this is where we're going to be teaching people exactly from kind of experts, so including Pattern Profits, who has 80,000 followers on here, how they conduct technical analysis. So if it's something that you've heard a lot about, you're interested in, but you just really never had an opportunity to kind of understand it, this will give kind of some insight into that. I'm bringing a couple of my friends who are big technical analysis traders. They make a lot of money doing it. People that trade, large cap, small cap, whatever it is. So you'll be able to hear from them. And then on Wednesday, I'm actually collaborating with Twitter. So Twitter Spaces, the official Twitter Spaces account. I've been collaborating with Twitter. I've had multiple meetings with them, and I'm putting on a financial literacy space. That is going to cover 5 different areas of financial literacy, including growth investing, dividend investing, entrepreneurship, crypto, and the last space is, I believe, yeah, budgeting and mindset. So that's going to be in conjunction with Twitter Spaces. So I've been working with them on that. And, there's just going to be many more spaces to come. And then, as always, I have a Friday this space, which is just you come on and you hear people talk about what they traded during the week. And also next Friday at 12 p.m. EST, all these times are EST. At 12 p.m. EST, I will have a one-on-one with Jonah Lupton, asking him questions from everybody that's kind of in the audience. Those just come into my DMs. We had 500 plus people on that this past week. It went really well. Some of the stocks we talked about really popped off nicely afterwards. So, when people DM me during those calls that they're making some insane buys. So it is a lot of different fun stuff going on. So that is just kind of covering that. With that being said, I am just going to kind of give each one of my speakers up here, just because I really appreciate them, just kind of maybe like 30 to 60 seconds to cover any last things that they want to talk about. And then we're going to wrap up because I have some other meetings to go to. So DC Finance, how about you go first?
Yep. Guys, retweet Wolf's post up top. That's the most help you can give them. Retweet, like it, share it with your friends. And I've just enjoyed having, these coffee breaks or lunches or dinner parties with all of my space friends. It's been fantastic. You guys have really enriched my day-to-day life.
Really appreciate that, DC, and that is really a huge, huge help. So thank you so much. And also, yes, all right, Wolf of NM, I will say it, Dogecoin, because it wasn't said once on this space. So just for the fucks and giggles. All right, Lamonte, anything from you to wrap up?
Nah, I just like to echo DC Finance. It's nice getting out of your own little bubble of information and experience, because then you get to see how other people are viewing the market and just how they're perceiving data and just in general their experiences, which gives you a nice overview of how everyone's looking at everything. But yeah, just wanted to say thank you to everyone that keeps providing content and information, and continue to do so.
Absolutely. Portfolio Hawk.
Yeah, so, first of all, I think thanks for setting this up and giving us the opportunity to speak. And as a closing thought, I'm just going to say I would like everyone to know that I hated Kathy Wood before it was popular to hate her. And that is all.
And I'm going to bounce right off of that one to stock market news.
All right, guys, let's join in a Kathy Wood live stream tomorrow. There should be some good negative thoughts as well, but some good positive thoughts. Yeah, I'm excited for it. We're going to have some great speakers in there. Maybe we'll get Portfolio Hawk in there at some point to give his thoughts and flush that out a little bit more. But yeah, I'm excited. I want it to be welcoming for both sides. So don't just think it's going to be either like a FUD, going one way, or like, talking up or talking down. I really want to get like just some good information and a bunch of, a wide variety of thoughts. So everyone welcome, come in, and I'm excited for it.
Cool. Risk versus reward.
No, I mean, vote on the poll. I'm trying to give away money. Yeah, I talked about a lot of different risky things. I guess I would just throw out there my biggest long-term thing that just I'm not talking about much right now is gaming. Gaming is just an easy bet for me. And I just keep adding to that, but I don't really think about it. That's like your Activision Blizzards, your Nintendos, etc.
Cool. Yeah, I'm big gaming guy too. I've actually, since I've been sick this week, I've actually caught a lot more Overwatch than normal. So long Activision. Yeah. Okay. Luke.
Yeah, I'd just like to reiterate really what everyone else has touched on is, these spaces, they offer so much valuable information and conversation, and there's so many great speakers. So definitely keep on tuning into the spaces, and thanks, Wolf, for hosting them. Also, if you haven't, go check out the Wolf app. It's awesome. Wolf mentioned it. Go check it out. I'm on there. A lot of the other FinTwit people are on there, so definitely go check that app out. And I would say an incredible platform, something that hasn't yet been, I would say, created, and definitely revolutionizing the FinTwit space per se. So go check that out. Thanks for having me on, Wolf. And also, I continue to push this. Please do the research on the name you invest in prior to investing. I see a lot of people investing and buying in and then doing the research. Don't do that. Do the research and then invest. Know what you're investing in, and have some reasonable expectations. But that's really all I have to say. Thanks for having me.
Absolutely, absolutely. And yeah, Luke is an awesome part of the Wolf app. And for everyone who comes on, I will note it's literally still in beta, so we have massive amounts of features that are still coming out. So it's a great time to get on. You'll see those features coming out. We're moving really fast over the next couple of months. We're a 15-person team, working really hard on this. And I'm actually excited because we started building this 14 months ago, literally the month that quarantine started. And I haven't seen my team, a single one of them in person, a single time. And I'm traveling a couple hundred miles on Sunday to go see them. So I'm actually very excited for that. And all right, I think I covered everyone else. So Twitter investors, you want to bring us home?
Yeah, I just wanted to say thank you as well to Wolf, always putting these great spaces on. Looking forward to more more spaces coming soon. I'll probably do another one tonight, maybe with Portfolio Hawk and others. More bull versus bear talk on either Bitcoin or Tesla or any of the good stuff. And then I'm also just really looking forward to Rocket being the next future reserve currency.
Absolutely, absolutely. Currently, Rocket. I don't know what it's at today, but yesterday it was at 0.14 cents, I think, or yeah, 0.14, something like that per Rocket. So we're well on our way there, to the moon, as they say. And yeah, so thank you to everyone. So my speakers, thank you for being always so cordial and insightful. It was really, really nice hearing from you. I learned a ton. That's why I do these spaces so I can learn. Everyone's like thinking that I'm out here, running stuff, but I do these so I can learn. That's why I do my podcast too, which you can also see. Also, all my spaces are recorded. So if there's any part of this that you heard something and you're like, wow, I want to learn more about that, I want to see it again. Josh Meltzer is here in the crowd. He's one of my analysts at Wolf, and he is recording these spaces within 48 hours, typically, sometimes even faster now. I get them up onto my YouTube and onto my Spotify. So if you like to just listen on Spotify, you can do that. I also put up a space that I did with Muji Hypergrowth and Francis talking about edge companies. And there's all types of spaces on there from many different types of people. So I think we're the only ones that are doing that right now, mainstream. So you might want to check that out. We cracked over 400 subs on the YouTube and got a shout out from YouTube creators. So that was kind of cool. But yeah, that's everything I have for now. So wishing everyone a very, very restful, peaceful, and exciting weekend. And hopefully we get a nice crypto pump. That's the last thing that I'll leave us off with. So take care, everybody.